Greetings and salutations, test takers. This is the Series 7 Guru coming to you from my studio in fabulous Las Vegas for our weekly community live stream with our always very special guest, Brian Lee, a.k.a. the Test Geek himself. Some people think that entities are not real persons, but Test Geek Exam Prep LLC does have living, breathing human beings as managing members. And he stands before you. No, Erica, VIX variable notes are not testable. Let us know where you're joining us from, what series exam you're taking, and that would be helpful for us. If you have a question for us, please put it in a question format so we can pull it out of the chat. It's easier, when people are chatting amongst themselves, which we encourage. It's partly a community event where you get to be simpatico with other test takers in a similar situation as yours. And this just helps us pull that out. It also saves us time. So Brian and I aren't going, well, gee, what test are they taking? Because on this test, it's, a big deal, time deal and a material to your success. And other times it's not. So that would be helpful. Remember, June 12th, the passing score for 65 will decrease to 70%. Very, very exciting. Brian and I have been talking about a long time doing some more collaborations besides him being kind enough to join us on our live stream more weekends, more Tuesday nights than not, and giving our viewers a 20% discount. And the first result of our collaboration is a podcast called The Geek and the Guru. And the first episode premieres tomorrow night, Wednesday night, 5 p.m. Pacific time on Spotify and here on the YouTube channel. And the first episode in our first series, for example, so we're going to do it by series, is Series 65. So how convenient. It's 6 episodes. We'll be premiering each episode on a Wednesday. So tomorrow night is episode 1. The following Wednesday will be episode 2. Episode 1 is who passes the 65 and who fails the 65 and why. So that's the first episode for tomorrow. Anything you want to add, Brian, about our podcast and our episodes or what's coming down the pike?
I am so excited. I can't wait. I just can't wait. It's so much fun to make them. It really is.
Yeah, we're having fun. We are having fun. So we're excited. So we'll do Series 65 first. Next class I'm doing, evening class, is debt securities. It's $50. If you want to register for that, you can do so at deantenneytutoring.setmore.com/classes. There's also a free live stream overtime tonight, but it is capped. It's capped at 10. One of the advantages of participating in the paid classes is that allows you to be in the overtime session, even if we've met the cap. So I saw Erica, for example, was already in there, but had she not been, and she said, hey, Dean, I want to join as an alumni, I would have just overrode it and put her in there. The other thing you get that is only free for paid students is a office hour, free office hours. I have to put a new one up. Those are capped at 5. And as we fill one, I open up another one. And that office hour, that free office hour, is only for, again, people who have paid for either a class or tutoring. Tutoring is $225 an hour. So an easier way to access the free office hours is through a class rather than paying me for tutoring. So that's how you get that. I'm excited. If you're an SIE test taker, I'm teaching the Kaplan SIE class next week, April 10th through 12th. I do the SIE the first month of each quarter. I do the 7 the second month of each quarter, and I do the 66 the last month of each quarter. And you get a 10% discount at checkout with Guru 10. And the other discount that's available to you is Test Geek content from Brian. That's Guru 20. That's a 20% discount. I tutored somebody today, Brian, who had your content, and I felt bad because she didn't use the discount code. She paid full price.
Was it the video course?
Yeah, she went all in. She bought everything, and I said, "Man, I'm going to have to tell Brian. He got full margin on you. You got
full all there.
Yeah. All right, so we did that. Tonight we're going to do something a little different. So I'm working with Kaplan, throwing stuff into our drawing, a free Kaplan product like a Quick Sheet or a free Kaplan product by like a QBank. Haven't quite got that ironed out yet, but we're going to do coaching calls, which we traditionally do. But we're also tonight, the drawing will be for free access to the class on debt securities that I'm doing next Thursday. So that's what you win. If you already have passed your exam and you feel like you're up to speed on bonds, well, then you can assign that to someone else. If you win that, you can just within an hour say, hey, I'm the winner. And then I will send you the link, and then it's up to you. You can assign the link, but in this case, you can't share it with other people. You can't have like 3 people show up. So one person, yourself or someone else, can attend that class. Best way to access on the channel is through the playlist for your particular series. It's a buffet. Take what you like, leave what you don't. All right, let's see what we got in the comments, Brian. By the way, the live stream tonight, just so if you're new to the live streams, after we conclude this at 6 p.m., there's a 15-minute break. And those who are registered for that, we then reconvene in a Zoom classroom, and we go over whatever it is you want to talk about.
Any debrief this week?
I didn't get anything new, and I've been so busy, Brian. I just haven't had time to organize it. So that means we'll double up next time.
Alrighty.
Nothing surprising. Oh, look at that. That's weird. I doesn't used to have that logo there on my.
Yeah.
That's kind of, I don't know. I changed, just so you know, the social media. Thank you so much for your support, but we're coming up on 2 million views, and we've got over 15,000 subscribers. And, Erica's been very helpful. She's kind of like my single person focus group. And I told Erica that, it wasn't Erica, but I told her the social media is becoming too big to run off my personal cell phone and my personal email. So I have got a Google Voice mail for the Series 7 Guru, and I got an email for that. And so I think when I did that, I must have somehow changed some other stuff. Hey, what's up? It is not Erica. VIX is testable. I would know VIX, the volatility index, is based on the S&P 500. Sometimes we call it the fear index, and you can use options on the VIX to hedge, hedging volatility. It's way beyond the test, but it's based on put to calls. And when people are fearful, they're willing to pay more for puts. So kind of counterintuitive. If you think the market's going to go down, you would buy calls on the VIX because you think volatility is going up. Anything else you would add about VIX? I don't think variable rate notes are testable.
No, I haven't heard variable rate notes in 25
years. 65, Clyde, investment. Clyde, got some good news for you as a 65. Saturday, I will be doing a live explication with a student through an entire 65 exam. And he has given me permission to post that. So there will be another 65 practice exam on the channel. Now, remember, the best practice tests are Brian's Test Geek practice tests because they have correlation. But in terms of your learning or you want to go through that, those other practice tests are there. We have on the 7, we have like 10 of them. On the, SIE, we have like 6 of them. This will be, I think, the 4th or 5th on the 65. So that'll be up, I think, Friday. Kyle, Series 7 from Florida. Woohoo. I don't know if you caught it, 66. There's a new 66 exam where Vanya was kind enough to give me permission to put up her 2-hour plus tutoring session doing a 66 practice file. So listen, on my channel, we do long form content. Oh, what a slog, 2 hours. So, but you don't have to sit there for 2 hours. You can hit pause and go get an adult beverage and come on back. But that's already up. And so if you're taking a 66 and you want to watch a 66 candidate myself do a practice final, there's lots of them, me just doing like Brian's and talking about it, but this is actually interactive. Series 7, Illinois. New Orleans. Oh, what a great place. I love New Orleans. I'm a big New Orleans fan. Texas, big place. New York. It looks like I got lots of 7s tonight. Lots of 7s. Well, Catherine, so let's first talk about what you should be doing tonight. It's more important than anything. That's right. You got to get some sleep, my friend. You want your reading skills to be in top form. And I don't know about you, but when I'm tired, my reading skills are diminished. So hopefully you can get a good night's rest. And, you're not going to learn anything tonight that's going to make a difference tomorrow. So the days of cramming are over. I have people who worked in college, for example. Well, that's not going to work now. So main thing is guard your psyche, stay away from any negative people, get a good night's rest. Any other, Brian? Catherine, on my podcast playlist, there is a episode I made called The Day Before the Test. You're the night before. So basically you could go all the way to the end. It says, get a good night's sleep. I'm not sure what you mean lowest rate for brokers, Erica. You held accountable for 4 interest rates. The 4 interest rates are discount rate, prime, Fed funds, broker call, and prime. And that's more SIE than 7. But I would know that broker call is used to finance margin accounts. I think that's what you mean, Eric. If not, and when the overtime session, when can see each other and talk to each other, just let me know and I'll be more than happy to elaborate on that. Is that what you think that means, Brian? I'm just trying to figure out.
Yeah, it's broker call rates. The only thing I can think of.
Yeah. Okay. Cynthia, another one of our favorites. I don't know if you're in the overtime session, Cynthia, but I know you have registered for our bond class. You know, if there were truth in labeling, a lot of people refer to the Series 7 as the stockbroker's test. But if there were truth in labeling, it would be called the bond broker's test because there is way, way more questions about bonds than there is stocks. So, you know, I know you're in the class and we'll cover those bonds next Thursday. Yeah, I can certainly do that. So, you know, we had, Nina, the National Securities Market Improvement Act. So let me make a note here. This is 1048. And the reason I bring that up, Nina, is because I will link to a video that I have based on this called Who's Your Daddy? And, you know, Congress passed the National Securities Market Improvement Act, NIMSMA. And basically it created two buckets, a bucket called federally covered investment advisors and a bucket called federally covered securities. State administrator hated it. And the reason they hated it is because it took away some of their power. And so investment advisors are either going to register with the SEC, if they're federally covered, or the state, never both. I see that Brian has his whiteboard going, so I'm going to give him the real estate that he needs. Oh, I accidentally gave myself the real estate. There we go. The assets under management, remember, federally covered would be 110 million and over that. And if you are 100 million or more, you can choose whether you want to be federal or your state. Right. And remember, it's never both, Dina, never both. Right now, that's really important in answering test questions, Nina. What I mean by that is you got to know in the cast of characters, you know, who's who. And here, before you answer the question, you got to say, is this a federally covered advisor? And is this an investment advisor rep of a federally covered advisor? Because that's going to be different answers than if it's a state covered advisor and an investment advisor rep of a state covered advisor. I don't think it's as big a deal, Nina, on your 63 as it is 65 and 66.
That is correct, Dean.
So there you go. And then I would tell you, Nina, we have Brian's Test Geek practice test on 63, and he's got some good ones. I mean, he's got some zingers, I call them. Like he's got, you know, state A, and then there's state B, and then there's state C, and then, you know, and then at the end of the day, you don't need any of those states because it's federally covered. So
the 63 is predominantly broker dealers and
yeah, I agree. So yeah, so stay focused, Nina. If you tell us you missed your mark on 63 because of investment advisors, if you say, you know, you didn't know what about broker dealers and agents of broker dealers, because that's what 63 makes you, Nina, is an agent of the broker dealer, the agent of the broker dealer. I've got a great video, Nina, and I'll link that as well, called The Mighty 90. And what I tried to do, Brian, is in 90 minutes cover the entire Uniform Securities Act. so I call it the Mighty 90. So wow. I'll link that for you, Nina, as well. No, that's not true. Producers Real Estate Group. There's what's called funded debt and unfunded debt. So funded debt are bonds that have a sinking fund. Now, the sinking fund can be used to pre-refund the bonds. You know, and maybe we have enough in the sinking fund to call all the bonds. Maybe we don't. But if we don't have enough to call all of them, we can do a lottery. I would know that funded debt has less credit risk than unfunded debt. Unfunded debt is, trust me, I'll figure it out as I go along. But mainly the test question is going to be about pre-refunding and yield to call, not so much the minutia of a sinking fund. So Brian's got his whiteboard.
Sometimes people kind of mistake the escrow account for a sinking fund.
Mm-hmm.
They're two different things. And it's the escrow account that is used for pre-refunding.
Mm-hmm. Well, you can put the money aside. So what I'm saying on funded debt. So look at the sink he's drawn there. Let's put a faucet on there. Can you draw a faucet?
Absolutely.
Get rid of the escrow, because we're not talking about escrow. No, I'm talking about what's going in. It's going to be dollars going in. We need the faucet above the sink, right? Because it's a sinking fund. There we go. Right. So we're putting the dollars into that sinking fund. Right. That's what's going in there. Now, some companies are setting aside money into the sinking fund and some are not. So that's what's called funded debt. I don't think it sounds like producers. I'm guessing you're using past perfect That's a bigger deal on Past Perfect than it is actually on the Series 7. I think the biggest issue, Brian, and let me take back some of your real estate there. I think the biggest deal is to Producers Real Estate Group know that if we are pre-refunding the bond, it's because interest rates have gone down. And I would definitely know that call risk is associated with the declining interest rate environment. And then I would know that if it is a pre-refunded bond, we must quote yield to call because the bond is not going to mature, right? If they've already set up an escrow account that has slugs in it, state and local government securities, we know the bond is going to be called. And that means the old bonds are considered defeased, can be removed from the debt statement. So it's more like this. I call you and I say, hey, you know those bonds we bought? You said, God, Dean, I love the bonds. Interest rates have gone down. The bonds have gone up. They haven't passed their call protection period. They can't call the bonds from me even if they wanted to. I said, you're all correct about that. You said, well, why are you bothering me? I said, well, they have pre-refunded the bonds. And you go, well, what the hell is that? And what's that got to do with me? I said, well, what they've done is sold some new bonds. They put the proceeds into an escrow account and they're buying some state and local government securities. And you go, well, great. And they owe me the money and they got the money. I go, yeah, that's great. I mean, it's AAA and the bonds are retired. And you go, Dan, again, I don't understand why you're bothering me. I said, I'm bothering you because we're not going to be able to hold these bonds to maturity. These bonds are most definitely going to get called away from you. By the way, in the secondary market, we would have to tell people these bonds, old bonds have been pre-refunded and are going to be called. Because remember, that's a big deal on municipals, this idea of disclosing calls. Anything else you want to add to that, Brian? I think that's pretty much it.
No, that's it. That's right. And for Series 7, I believe there may still be an escrow pre-refunded government securities question.
Yeah, you can't have, if you join us ever for like a 53, there's more stuff about like you can't, have a positive carry, but for 7 it's pretty straightforward.
Yeah.
Thank you so much. I love referrals. Brian, I told you today has been a big day for me. I'm pretty tired, so I apologize. I'm not really, as spirit filled as I usually am or would think I am. But boy, I'll tell you what, referrals from victorious test takers and their victories have just been feeding unbelievable growth of the channel and the views. And I really appreciate it. We're up, like I say, close to 2 million views. The public displayed number is behind the backstage number. And we're past 15,000. And I don't ask for people to hit the like button. Because when I watch YouTube, I get a little aggravated when people say, smash the like button, boop the like button, subscribe, turn on your bell. I'm not into that. But we're still, even without being an ask call, ASK, we're running about 400 new members a week. So that's crazy. Crazy. I've had people who would have thought this? Like I've embraced being the old dude. My haters on social media say, "Oh, he's the old dude." I go, "Yeah, I'm the old dude. What can I tell you? I'm the old dude." Anyways, I've had people approach me about being a real social media influencer and getting paid. I said, "Well, that's crazy. That's crazy." I did a Vanguard class today, Ryan, and I showed up with the crew members. It was kind of funny. They called me at the last minute and said, "Will you substitute? We don't have anybody." I said, sure, I'll be a substitute teacher. It was kind of fun because the people showed up. They go, oh, you're that guy on YouTube. I go, yeah, that's me. So,
was it Scottsdale or was it nationwide?
It was nationwide. Yeah, they were allowed to punch in for whatever. And so, I like being informal. So not really something I want to do full time because I like being kind of free form. This is not, I don't know what you mean if this is the live class. No, this is our welcome Evenet. This is our weekly live stream Q&A. We do every Tuesday, 5 p.m. Las Vegas time. And afterwards, not every Tuesday, but some Tuesdays, we do what's called a overtime session on Zoom. And that starts at 6:15. That'll be posted as a replay. You can go on the channel and see a replay. And that is closed. If you want to join us for that, you have to register beforehand. This is available to everybody. It's available every Tuesday, 5 p.m. And then we have what's called a live stream overtime. And then we have classes. The classes are found at the same place. You access the free live stream and the free office hours. Right now, we just completed a first quarter schedule that included lots of classes that you can find on the replay for class replays. types of orders. What else did we do? We did, I can't even remember what we did. Margin, municipal bonds, all kinds of stuff. That's there available as a replay for free. But in terms of class content, that's there. So that's what we mean by a class. That's at deantenneytutoring.setmore.com. And this is on YouTube. And then, as we said, we're really excited. I don't know what series you're taking. Thanks for joining us from Facebook. We broadcast to Facebook, LinkedIn, YouTube, and Twitter is where we're broadcasting to. I'm trying to get Brian to broadcast to his YouTube channel as well. But so thanks for joining us from the Facebook. And there is a Facebook Series 7 Guru Facebook page. I'm not a big Facebook fan, but I have it available if you want to access us like you are for the live stream. So as I say, thank you. But Brian and I are very excited that we now have launched our podcast. And so if you are in the car and you want to listen to us audio, you can find us on Spotify, or you can listen to us as a video podcast in our video podcast playlist. And we've got the next 5 weeks. Brian, I think, did you say we're going to do 6?
I believe you announced 6 tonight. Yes.
Okay, so we're going to do 6. All right, so 6 episodes on 65. And then we're talking about doing the SIE next is what we're talking about. So that's kind of where we're at on that. Capital asset pricing model, required rate of return. What do you think, Brian? Can we do that in the live stream?
No math.
No math.
Am I clear on that?
Clyde,
no math.
I would know the inputs. The inputs would be the risk-free rate of return, the beta. What else am I missing? Beta, risk-free rate of return. And we're going to times that by the beta, right? What is the? Let me get Brian as a whiteboard.
No, it's not much. It's just,
yeah.
As far as I'm concerned, and I'm so adamant about this, as you can tell, there's just no math about this, contrary to what the textbooks tell us on the Series 65. And I think it's just a rational realization or realization between risk and what type of return you should look for. I think that's all it is.
I do too. We were talking about this too, Clyde, that I told you I spent the whole day tutoring Vanguard crew members on 65 and 66. And I'm a little disappointed. I'm not as adamant. Brian and I've talked about it. He's tough love. If he doesn't think it's there, he won't even cover it.
No.
And, I was covering it and I kind of thought, well, gee, I'm a little disappointed we're spending our valuable time on this when we could be spending it on things we know are there that have higher payoff. Mainly just recognition of a required rate of return based on the amount of risk you're taking. And then again, maybe, that a higher Sharpe ratio is better, just, basic stuff. Nobody wants you to get a PhD in modern portfolio theory or this stuff. They just want to make sure that you can sound halfway reasonable at a cocktail party, I guess is the way I'd say it.
I love when somebody asks about CAPM. I love them because they've just read this formula that it's this long in the textbook.
Yeah, no, and it's actually in the, CAPM, we cover it a couple places. So.
Sorry.
Yeah, this is very testable, Nicole. I say that, the test goes in and out of items. And I was doing a night before kind of coaching call for these Merrill Lynch brokers. And the young lady said, hey, Dean, what about error and report and error and execution? I said, well, I haven't had anybody see it in quite a while, but error and report, the customer is obligated. So, Nicole, if I call you and say you bought 1,000 shares at 18, and then, I call you back and say, oh, I'm sorry, Nicole, you actually paid 1805. You owe 1805. That's an error and report. Now, if you gave me a buy limit and you said, Dean, buy 1,000 shares at 18, that's a buy limit. And it went off at 1805, then the broker dealer is obligated. So, that's the test question. And it's Nicole, that young lady told me she's seen it. And it's been high probability this last, I would say, 8 to 12 months. There's a lot of people who have seen this thing. So error and report, the customer is obligated. Now, if that happens too often, that customer might find a new broker. Yeah. Error in execution, the BD is liable. Brian, you want to add to that?
Yeah, that's exactly right. And I think that question's still on the test.
Yeah.
It's been around forever.
Yeah, that's it.
And if just exactly the way Dean explained it, if a rep says, hey, we just bought you 1,000 shares when it was actually 500 or 1,500, Well, the customer's still obligated to pay whatever the true execution was.
Yeah.
However, if the firm goofed up, bought 300 shares when you said buy 100, then the customer is not up.
It's pretty aggravating, Brian, that you and I have a pretty good handle on what is actually on the test. So, we've been doing it a long time. So that's, I
we're the old guys, remember?
Well, there you go. We say what you call ourselves the old guys. But anyways, it's kind of aggravating, Nicole, because I had explained it exactly the way it's on the test.
Right.
And then somebody came up with their kind of spin on it. And I thought, why are you trying to turn this into a question that it isn't? And they were saying, well, there was no error execution because it was a limit order. Well, that isn't the test significance. That's not what it's about. So,
see, that's what happens, Dean, when you become an influencer. You get social media haters out there.
Yeah. Correcting me on.
Exactly.
Greetings and salutations, Caesar. Good to see you, my friend. We have our regulars here. If you're new with us, we do have our regulars. I call our regulars. I would throw Cynthia as one of our regulars, and Erica and Caesar. And the disadvantage of being a regular is I'm a person who likes to tease. And just so you know, if you're not a regular and you hear me teasing somebody, who knows? They may be mad at me too, but all done in love and jest. So. Can you go over advertising and how it relates to advertising? I'm not sure, Eric, I understand that one either, but we can add it to Zoom. I wouldn't call it advertising. I think, Erica, what I would call it is sales literature. And because the idea of it being sales literature, remember, means that it has to be approved by a principal pre-distribution. And it will be filed with FINRA either 10 days prior to first use as a new firm, first-year firm, or 10 days after first use. I don't think on 7 they get into third parties and as ad agencies. What do you think, Brian?
Yeah, that's a tough one. There might be one that the third party would have to be disclosed, that kind of thing. I don't know. I maybe one at most.
Well, we don't know we don't know in Unit 20 of what series exam for Kaplan. Is it Unit 20 of Series 65 or 66? I wouldn't call it terminologies. I would call it vocabulary or nomenclature. And I would say that vocabulary in general, I don't know about Unit 20 and what's in there, so maybe you can re-put that in the chat. By the way, if I accidentally miss you in the chat, I apologize in advance. So sometimes it's hard to keep track of what's going on in the chat. We had somebody, Brian, who was joining us from LinkedIn, and in LinkedIn it shows me their comments. And in her case, I didn't catch that she had said not, and then I missed one of her things. So at least in LinkedIn, I can respond and make good on it. But don't take it personal. It's not like I'm skipping you on purpose, right? So anyways, I would say vocabulary glossary is very important because, I got finished tutoring a person just before we started our live stream. And listen, I have nothing but love for my Portuguese friends. I know, my Portuguese friends from Portugal and Angola and Brazil and Mozambique and Macau. And I can't even imagine translating this from English to Portuguese and back, or my favorite person of late, Mandarin. And so you can, in his case, when you're doing the tutoring session, he was pretty squared away. It's just the terminology and vocabulary was getting him because, he's trying to figure out the Portuguese equivalent of the English language. So, you can petition for extra time if that's the case. But I would say in general, vocabulary, terminology, nomenclature is important. What do you think, Brian?
Absolutely.
Right. So,
because oftentimes it may be used against you.
yeah, that's true. Representative advertising. Well, Erica, the only thing I could think of as on the 7 is that you should definitely know as a representative, you better damn well not be placing any advertisement that has not come from down from on high, from your firm itself, approved by a general securities principle. What do you think, Brian? Anything else you would add to that?
Yeah, it's a bit vague. Representatives in advertising, you can't do diddly without getting principal approval.
So,
basically.
There's all kinds of rules about it, so they don't want you thinking you know the rules and you're going to make up your.
That's right.
I joke, the larger the firm you are, the more strict it's going to be. So, I always say I started Erica. I had my own firm called Gamma Global Investments. And I don't tell anybody I told you this, but we're pretty loosey-goosey at Gamma. At the end of the day, it's just me, so, and my, people I'm working with. So we're not going to be as strict about things as somebody like Merrill or Vanguard or Fidelity or something like that. There you go, Simple Mama. Love it. Love it. Yeah, we try to be very detailed. I just talked to somebody the other day. I think if you can understand contract specifications, what I mean by that is you're not fumbling around. A short put as an obligation to buy the stock. And you can track money. You're going to dream of having 125 option questions because you're going to get them all right. So I do believe in actually intellectually owning the options. Now, that doesn't mean we're not going to use memory work like memorizing call up and put down and stuff like that, silo, cow, push. But that being said, I feel good if you can learn that. I've watched some other videos. I do watch other people's videos who tell me, they'll say they got the secret to options. And Brian, I watch them do their equivalent of your whiteboard work. And it's really, it's like, okay, I guess if I already knew options, I would get that. I'm not so sure I would get it if I didn't. So I put those, Simple Mama, there's probably 80 options question videos. I put them in suggested watch order. The first 3 videos are a must. I have them. That's the base, nomenclature, vocabulary, basics, stock plus options, and then advanced option strategies. And then a lot of those videos are questions that people have sent in. So like Erica will send me a QID from Kaplan every now and again. Sometimes it's an option question. I'll make a little video and I'll put that in the playlist as well. Well, it's not stocks that track the price move of the whole market, but Nicole, that would be a stock with a beta of 1. We would expect it to track the market. I'm not sure that's what you're asking. And I don't know what series you're taking, but if you're taking a 65 or 66, Nicole, I would definitely know the Wilshire 5000 index reflects the total U.S. stock market. Now, individual stocks that would have a perfect correlation would have a beta of 1. Anything you would answer, Brian?
No, that's exactly right. Other than the ETF is the first thing that comes to mind, other than a stock.
Yeah. ETFs. The test question about and again, Nicole, we don't know what exam you're taking, but you definitely in all the exams, SIE 7, not as much on 6, but 65, 66 should be able to contrast an open-end mutual fund with an ETF. You got to know, how is an ETF different than an open-end fund? You should also be able to track the difference between an open-end fund and a closed-end fund. And you should also be able to distinguish between an ETF and an ETN. So those are all test issues for you. Thank you, Eli. You're too kind. Too kind. Thank you so much. We got 2 Ericas. Watch out. 2 Ericas in the live stream. San Diego. What a beautiful, beautiful place. I love
my favorite city.
I spent a lot of time, Erica, in Ensenada. My father is based in Ensenada, so I always time it so that I show up in San Diego, get a day or a couple of days in San Diego, then I cross the border to Ensenada. Such great weather, such great weather. Can I do a debt quiz live? I love Erica. I always tease her. She's going to do so well in the business because we always say, you got to ask for the order, and Erica's always asking for the order, right? So I don't know, Erica. It depends on time. You're asking me on a bad day. I just spent the whole day not retired, as Brian always teases me. So a chance that I'm not going to do a debt quiz live. If I can find a debt quiz and I invite people, I guess we could. I mean, I'm not opposed to it. I have to find the time to do it. So, as I always tell Erica, I appreciate you as a focus group, but, Brian's kind enough to join me on Tuesday nights and we're collaborating, but, I am a one-man band. So, it's kind of hard to keep up with everything. 766, that's typical. That's typical. The bond class, Cynthia's been I think it's Cynthia. I've been saying I'd never, Simple Mama, done evening classes. So I'm usually teaching these top topics in a 4-day or 3-day cram course. And so my timing is a little off. So that first sequence, I've been saying things are going to be an hour and they've been a little over and sometimes substantially over. So I have it as 60 minutes, but I want to be clear with people that, whatever it takes us to get that done. And then the next quarter, when I put it on there, then I'll have the timing down. I'll know exactly how long it takes me to do it. I think I have it on the schedule as 60 minutes, but whatever it takes us to do. And then, Eric was just asking about a live quiz. Cynthia had suggested that we build in some questions to do together. And we did that in types of orders. And I'll do that in the bonds. And then the Simple Mama, that means it'll be a little longer if we're doing questions together. So, we'll see. So I would be prepared. I don't know, Cynthia, if you're still here in the chat. Erica, you're in the chat. I would be prepared for 90 minutes. I would be prepared for 90. We'll go for 60, but if we need it, we'll go to 90. Well, it depends how, this is very testable, Nicole. So you should know that a half a point is $5, right? So let's start there.
On a bond.
That's right. On a bond. Yeah. Well, this is how it comes up as a test, right?
Right.
You should know that if all you got was the concession, that your firm was a member of the selling group and was not liable for any unsold securities. So now what you have to do, Nicole, is know how many bonds your firm sold. So if they say, I'll just make up one here. I'm getting my calculator, 35. I actually have a whole video. I'll link to it on underwriting municipal bonds. And let me make a note here and I'll put that into the replay. So if you watch our replays, I timestamp them and I put that. So I'm going to say we did $5 million worth of bonds. I'm terrible at arithmetic, so Brian's probably laughing at me, but that means we sold 5,000 bonds, right? So that's what I did. I just took the number of bonds they told me my firm sold. I divided by par, and now I'm going to times that by $5. And so our firm made $25,000 in that bond, selling those bonds. Is my math right, Brian? Did you check me?
No, I didn't.
Okay.
5 million bonds divided by 1,000. How many bonds is that?
I said 5,000 is what I said.
That's about right. 5,000 bonds we're selling.
Yeah.
And we get a half point, which is $5.
Yeah.
Times 5,000 is $25,000.
Yeah, that is definitely on the exam, Nicole. I'm assuming you're taking Series 7.
Series 7.
We haven't had anybody tell us. I don't know about Brian. I haven't anybody in years tell me that anything about variable rate demand questions on the actual exam. With a variable rate demand, makes it a short term because they're redoing the auction. The auction could fail. I think that's what the answer would be. I don't know why you would say it's a put option. I don't know what that means, Nicole, about the variable rate. Brian, you want to take a shot at this one?
Wow. No.
I haven't had.
Put
Have you
options on bonds. No.
I haven't had anybody in years tell me they've seen anything on the real test about auction rate securities or variable rate demand securities.
That's right. Or how about
Erica? How perfect. A variable rate demand note is a complex product. And so the test question, Erica, is complex products like derivatives, like CMOs, variable rate securities, ETNs have heightened suitability. That there's less risk in what we call plain vanilla products, things that are tried and true. So Brian, you'll love this one. We were talking about people who have secret ways of doing options. I said, well, there's a reason that training departments and guys like Brian and Dean do it a certain way because it works all the time. It's tried and true. It will always work. Tricks maybe don't. And in terms of these complex products, they don't have a proven track record over the long term of how they really react in the marketplace to certain kind of things. And so, we know how a growth fund works. We know how common stock works. We know how bonds work. So complex products shouldn't be sold to Joe Six-Packs, retail investors. And unless they understand it, which, most compliance officers are going to say they don't, so don't sell it. It's not on your approved product list. I think the main point would be heightened suitability. What do you think, Brian?
Yeah. On the Series 7, you're not even going to worry about it.
There you go. Mortgage-backed securities, risk B, interest rate risk. Right. If interest rates go down, everybody refinances the mortgage and it ends sooner than later. And now you got to reinvest at a lower rate. And if interest rates go up, nobody's going to refinance and you're stuck at a lower than today's return. So mortgage-backed securities do better at a stable interest rate environment. They don't do well in interest. What's that?
2010.
There you go. Or even today, right? The Fed's been raising rates. Yeah. I need help with options, bonds. Well, yield to maturity. I'm not going to make you crunch that on the exam, Laura, but you do need to know where yield to maturity is in relationship to the nominal yield. So you should definitely know that in a bond at a discount, we're going to quote to the customer yield to maturity. And in a bond at a premium, we're going to quote yield to call. So we have a teeter totter or a seesaw, and I will make a note. 3926, and I will post our teeter-totter seesaw about how to do that. There, Brian's actually going to the whiteboard. Let me give him some space. Brian, what I love about the teeter-totter or seesaw is that it turns judgment questions, Laura, into aim and shoot, point and click questions. right? So we're looking about this. You should definitely know that interest rates have an inverse relationship with bond prices. So your interest rates have been going up and bond prices have been going down. I joke, Laura, if anybody ever asks you about economics, finance, or investments, and you want to sound smart, you should say it has a lot to do with interest rates. And if you just shut up, you sound good. People say, well, what about them? You say they fluctuate. You say, is that good news or bad news? You say it depends. So, Brian, she is taking the 65. And so I don't think you're going to get as much of this as you would on a 7.
Absolutely right.
So I think that's our next episode, episode 4 of Brian and I's podcast on 65, Laura. I don't know when you're testing. So that would be what, 3 weeks out is bonds. We're going to be doing bond yields on our 65 podcast. So, Brian, you want to explain your teeter-totter there a little bit?
Oh, my goodness.
Or just to show,
right. So the price of the bonds change, but the annual income, of course, is fixed.
That's the
As that price changes, it affects our return on investment, known as yield. Mm-hmm. And there's several ways in which you can calculate this return on investment, and that's what these 3 are: the current yield, yield to maturity, and yield to call. Again, they're just different ways of calculating an investor's return. One is simply on price, one is based on time to maturity, and one is based on time to call. However, the most important thing is the relationships between them. Which one is greater? Which one is lesser? It's not about the math so much. It's about relativity. Which one is greater? Which one is less?
And then, Laura, I'd also tie into that on options, by the way, on 65. Brian and I have this discussion all the time on options, maybe 3 or 4 questions on 65. And you got to make editorial decisions about how much time you want to spend on options or past the 65. Right. Maybe 4 or 5 or 6, including futures. So I think bonds would be more important than options on the 65 personally.
I think so too.
So, that's something to do it. And those are judgment questions in terms of, the bond prices. The other thing for 65 and 66, I would be aware of test takers is duration. I would know that long-term bonds are more volatile than short-term bonds. Well, thank you, Cynthia. We think so too. Well,
especially
Kyle,
when Dean gives me all this real estate.
Oh, sorry, Brian. We're getting better on our podcast. I forget to put it back to this.
I know.
I know you kind of chopped you off there. How stock or cash dividends impact option holders? Well, cash dividends don't impact them at all. We don't adjust option contracts for cash dividends. And for most part, we're going to end up with a stock dividend. Depends how much it is. Kyle, I don't think it's productive to be studying that. I mean, test prep vendors go into that. I would definitely, Kyle, know that orders below the market, bliss, buy limits, and sell stops will be adjusted for cash dividends on the X date. I just posted a lecture on that. So you can check that out. I'll link to that, 4310. What do you think, Brian?
Yeah, there still might be one out there on the test.
Okay.
I, just like you, I have a stock dividend or cash dividend option question on my option quiz.
Okay.
I have heard it from time to time. It still may be out there.
Is that your 44 practice questions?
Correct.
So Kyle, Brian has been kind enough. I just tutoring using those questions. Obviously, Mutual Admiration Society, Brian's my brother from another mother, but I was using your 44 questions to tutor somebody, and I just forget how spot on some of your questions are in that. And Kyle, that's on the channel, available free. You can watch me do Brian's explication. In this case, I was tutoring that person I told you, Brian, and she wanted to actually do that together. And we did it on a shared screen together, some of his questions. And, she had brought them up because she had done it already. And, I'm not going to call them gotcha questions, Kyle, that Brian has in those 44 questions. But he has a lot of questions where if you don't RTFQ, you don't read the full question, Brian's going to get you. So the one that always people, miss up is he has a question about an index option. He's testing you on, do they settle in cash? And he doesn't ask you the profit or loss. He just asks how much are you going to receive? And everybody wants to complain about, well, the profit is. I go, read the question again. It didn't ask you.
Profit.
It said, what are you going to receive? So you might want to look at that, Kyle. That's in the options playlist. And I think I call it, I think it's got Brian's Test Geek logo, and he's got one. And I show you how to actually do that if you're interested. So. Well, because the technology fund tate, I hope I'm pronouncing that right. If I'm not, I apologize. Because the technology is a narrow-based part of the economy. So I'm not trying to hedge the risk in the entire stock market, the S&P 500. So if I have a narrow-based portfolio, so I say, listen, all you own is technology stocks. And you go, yeah, I'm a technology fund. I say, well, then we need to buy puts on the technology. What is it? It's the Morgan Stanley Technology Index. I forget what the ticker is. But that's what you would do. If you're trying to hedge systematic risk, you would buy an index put on the index that most closely approximates the portfolio. So I would imagine if you missed this, maybe you would set a broad-based put, but it would be narrow-based because of technology. That would be my justification. But I wouldn't feel too bad as your accountability partner if you got the put and you said the S&P. That means you're on the right track.
That's right.
It might end up being Tate a gotcha question. So you thought you knew it? Ha! I'd be pleased enough if you just got to buy a put.
Correct. That's right.
Remember, there's two versions of this very testable. For protection, we buy, and for income, we sell. So I would be happy if you just got to when you're protection, you say, okay, I'm either buying a put or I'm buying a call, depending on whether I'm long or short.
Right.
Yeah, well, every test prep vendor is guilty of a certain amount of that, I guess. And that's why Brian and I exist as intermediaries or bridges from, your test prep vendor, whether it's STC or Past Perfect or Kaplan or whatever, Knopfman. We try and bridge that gap for you. What you might want to consider is either using the free supplement, my channel, or one of Brian's paid supplements, either pre-study or post-study, either to put a dent into the reading or put a dent into their videos. If you want to do it pre, I'm not opposed to that, or after the fact, as the way to do now. Brian and his paid supplement, I think, Brian, you saying after they're ready, they've done through their STC, then you're there to close that gap between that and test time. Is that correct?
That's correct. After you've established a base from the textbooks, then you go to us, the intermediaries, to distill that information to testable input. Again, how I love to put it, turning mashed potatoes premium vodka. That's what we do.
So I would say, listen, I'm never opposed to having a supplement, free or paid. And so it sounds like obviously we're going to say this, but I think we're truthful. We're not being unethical, and your comment screams supplement. So whether that's the Kaplan Q Bank, whether that's Brian's paid supplement, whether it's my YouTube channel, that sounds like that might be helpful for you. All in on Brian is $100. All in on a Q Bank is about $60. And then I have that very popular price point of free. Taking 65. Yeah, there'll be some overlap, Cheryl. So yeah, the more and more I keep thinking that 65 is, really a difficult exam. For that reason, it's a lot of stuff, and a lot of people maybe don't have a background in it. And make sure you check out our video podcast or audio podcast, because that is our first episode, is about the 65 and who takes it and who passes and who fails. And I think, Cheryl, that'd be a great introduction to the 65 for you. That's how we've designed it. And then in episode 2 and moving forward, we get into the content of the 65. So I wish I could tell you it's easy. Don't worry about it, but it is a big undertaking for sure. I don't think I ever mentioned a 2-hour 66 class. I'm not sure. I don't recall mentioning. I said that today I spent 4 hours tutoring people for Vanguard on the 66. So that's what I said. And then I said I teach a 3-day 66 class in June. And I think I said that. So I'm not sure if you misunderstood me. So that's what's going on. And then I said I just posted on the channel. Oh, then maybe this is it. I just posted on the channel a 2-hour plus live explication of a Kaplan practice test where me and the student Vanya queued up a practice exam. We did the entire thing together, and it took us 2 hours plus, but we went through each question. Vanya would attempt to answer. And I go, no, I'm joking. I wouldn't do that. But, we let her miss because she was trying to get a mark before she tested. And then I would tell her what the right answer is and what she should be aware of. And then we queued up question 2. And so you can see that on the channel in the 66 playlist. I put at the front of the list, it says Series 66 exam, live practice test explication. So maybe that's what you meant. That's up. That's 2 hours. And as I mentioned, what can I tell you? My YouTube channel is long stuff. I don't have any 1-minute videos. You're welcome. You're welcome. I don't know what you mean by 2 different 529s. Are there 2 different 529s? I'm not aware of 2
college specific, state specific, something
Oh, is
like
that what you mean, Erica? I don't think they're going to ask you to distinguish between them. The test question, Erica, is can you distinguish between a 529 and a Coverdale?
Coverdale.
That's the test question. And then usually they want you on the test to say the 529 is the better deal because you can put more money in it, stuff like that. Price to earnings, very testable. You simply take the price of the stock, you divide it by the earnings, and get what's called a PE ratio. If you can't remember what to do, you do division. And if you can't remember what to do, you divide the first number by the second number. I would have a general understanding that growth stocks typically have higher PEs, trade for a higher multiple than, value stocks, for example. But again, if you tell me you missed the exam because of PEs, I'm going to say I don't believe it. No. 66, there you go. Oh, there you go. I told you, I was just helping my Brazilian friend.
Obrigado.
Yeah, and obrigado means thank you in Portuguese. So Tate was so funny. I was just telling him, I'll tell the story real quick. I was going to Brazil, and I went to the Brazilian embassy in San Francisco. And boy, I was kind of, taken aback because I said, oh, I want to do this and that. And they said, this is the visa you get, and here's the process. Not very, customer friendly. And then they said, well, Dina, we treat countries of other citizens of other countries how they treat Brazilians. So we're only making you do what the U.S. makes Brazilians do to get a visa. So that's, I go, oh, they're practicing reciprocity. I thought I was in Brazil, and this lady was yelling at me in Portuguese, and I had no idea what she was yelling at me. And then the next day, the guys who I was with, I said, what was she yelling about? And she said, Dean, she was telling you that you should take off your Rolex and not wear it around town because somebody's going to, knock you off for your Rolex. I go, well, geez, guys, why didn't you tell me that? I would have put on my G-Shock, I thought I did business with my Angolan friends, and it's so funny because they would come to San Francisco, and my friends would say, your African-American friends were here. And I go, no, they're not African-Americans. They're Africans. They're from Africa. What represents a spread? Nicole, a spread always means difference. So I always tease Brian. I say, hey, Brian, what's the spread tonight? And what I'm asking him is, what is the difference in the scores? So when you hear the word spread, you're always being asked, what is the difference? Now, Nicole, I'm not sure if I remember correctly. If you're taking a 65, you should recognize a credit spread as it relates to interest rates.
Right.
There. And if you're taking a 7, you should recognize a spread as it relates to difference in premiums. And so there would be a credit spread. That means the difference in the premiums is more money into your pocket than out. And debit means more money out than in. So it depends on the context of what you're asking spread, but spread always means difference. So whenever you hear the word spread, somebody's asking you the difference in something. Now, if I ask Brian, what is the spread? I'm asking what is the bet?
In a basketball game.
Of course, because I'm a basketball guy. And then, we can make a bet that it's going to stay within the spread or outside of the spread. And the same in options, right? If it's a debit spread,
yeah.
I want it to widen. I want it to be outside of that number. And if it's credit, I want it inside that number. So if you're talking about options, I have at least, 5 or 6 lectures on spreads. But if you're talking about 65, which I think you were, then it's the difference between what low credit quality bonds pay and high credit quality bonds pay. No, they don't, Nicole, like to change the test for changes. So they fly high on this stuff. Test prep vendors certainly get in the weeds on this, but fly high, 59.5, 10%, 73. I wouldn't know the 6,500 or any of that stuff. What about you? What's your thoughts, Brian?
Absolutely. You're absolutely right. I talk about this all the time. These numbers change almost annually. They don't want to change the test because they can't decide whether they change it at midnight New York time or midnight Honolulu time. So,
but if you have anything, Nicole, like for example, the 73 is a recent, well, it's relatively recent change, and they are testing on that current number. So, make sure you do check with your test prep vendor on their dashboard, and they usually will update their materials accordingly. The other aggravation I have, Brian, is a lot of times people will actually be telling me that they found a typo, and I said, what edition are you using? And listen, don't be so frugal that you don't buy the latest edition. And I'll find out that they're using a book that's been passed down for, 5 generations of test takers at their firm, so this is not the time to be frugal. Sure, Clyde, just, we open up the Zoom call tonight in the overtime session, and it works by chat. So Clyde, if you're the first one over there, when I open it up, we put you, and then we rotate through the chat until our 45 minutes is over. Series 7. Well, there you go. So Nicole, was it that you asked about the spread? So that's,
yeah.
So 8 things on a spread that you got to know. I'll link to the spread at 55.45. And the 5 things you got to know about a spread, Nicole, is can you identify it? Can you identify, after you've identified a spread, long and short, the same type of option? Can you determine debit or credit, exercise or expire, widen or narrow, max gain, max loss, break even, bullish or bearish? I call it don't hate the 8. So if you can be menu driven and you can identify it, debit or credit, exercise or expire, widen or narrow, max gain, max loss, break even, bullish or bearish, whatever they want to know, you've got the answer to it. Now, Brian he's showing you his version. I call it the matrix. What do you call it? The beauty chart, Brian?
The Series 7 options aerobics.
Aerobics. There you call up, put down. There you go.
That's what I was doing earlier. Yeah. So it's basically buying and selling calls and buying and selling puts. Yeah. Those are your spreads. That's how you recognize them.
Yeah, but
Dean said the hateful 8, don't hate the 8. Break evens, max gains, max losses, those sorts of things you have to know how to manipulate those.
Yeah, and then Nicole, the other thing I would do, Nicole, is sometimes the most hellacious one you get is an options spread that's missing premiums. And so, this is not probably the appropriate time and place, but you should definitely know that lower strike call contracts always have greater premiums, and higher strike puts, Nicole, contracts always have greater premiums. And so what that means, Nicole, is the lower strike call is always the dominant leg in the spread, and the higher strike put is always the dominant leg in a put spread. And so you can determine debit or credit, and you can determine bullish or bearish with missing premiums. There you go. I love it. I love it.
That comes later.
Yeah. Well, mutual fund dividends are passed through. DI 90 dividends on the stocks in the portfolio plus interest on the bonds, less expenses. That gets passed through. Most funds do better than 90%. I don't know what you mean by redistributed. They pass through. I don't like the word redistributed. Yeah. And then you owe taxes on that. Now, if you reinvest, Kyle, this is testable. The IRS says, Kyle, as far as we're concerned, you could have got the money. So if you're in a dividend reinvestment program and you reinvest, that's called constructive receipt, and you're still going to owe taxes on that. So I tell the mutual fund, I don't need the money right now. Just buy me additional fund shares. You're still going to owe taxes on that. That DRIP is testable. That DI 90 is testable. And you should also know REITs are very similar. REITs also pass through 90%. And remember, they don't pass through losses. Just there you go. I love Brian's got his whiteboard going again. Yeah. Right. So there's his bucket of the money coming into the fund being passed through. The capital gains are when the manager decides to sell the stock. And that's called a capital gains distribution. And you say, I don't need it right now. Buy me more. The IRS says, as far as they're concerned, Kyle, you could have had that money. You could have chosen to get the capital gains. You could have chosen to get the dividends. And so you owe taxes on it. By the way, I would know that that's referred to as a DRIP, a dividend reinvestment program, even though we're also perhaps going to reinvest capital gains. But the point is, it's taxable.
Now, let me ask you this, Dean. With these distributions, is my cost basis on my shares adjusted?
No, it's the NAV is what it is. You're going to pay taxes on.
I think that's what he was asking.
Oh, okay, cool. Well, that's why we got 2 of us, the geek and the guru. Between the 2 of us, we can figure it out. See how
we did that? That was pretty cool, huh?
Yeah. Well, your margin max, I wouldn't worry about it because there's only going to be 3 or 4 margin questions. And let's see, what's your other one? Communications. I would note, 25, more than 25 is retail communication. 25 or less is correspondence. I wouldn't be working. I guess I would say you need to lay more base knowledge. You don't do practice tests to gain knowledge. You do practice tests to get a mark, an intellectual inventory. So I would say maybe lay some more base knowledge. Take 2 or 3 days, come back and see if you can bump that score. I would like you to be in the 70 range. So between 60 and 70 max, you're at risk. I don't know when you're testing, but we want to push that into the 70 range for sure. All right, looks like it's time for our drawing. Let's just see here. 2 questions on Coverdale's. Thanks, Mary, for paying it forward. She said she got 2 questions on Coverdale's.
Yep, no doubt.
Recommend. There you go. Looks like we got some victorious test takers passing and paying it forward. 24 on. I welcome General Securities Principal. 68, you're going to pick up some score points because all of the test prep vendors on 24 go into the weeds. Can you draw 2 today? I can draw 2 because we're drawing for the debt class. And so I will do 2 drawings, Erica. Did you say podcast is done already? No, I said the first episode, Clyde, is tomorrow night, 5 p.m. That will not, Kyle, be on the test, but the test point or the Kaplan point or whoever your test prep vendor is, recourse notes, add to my cost basis, non-recourse does not. I can't imagine you're going to see that on the exam.
No.
The long stuff. So thank you. Okay. Oh, I like that. So Pineapple in LA says our word for the drawing should be drip. Hold on. Let me bring up
good job.
Our giveaway tool. And we're on April 4th. And we'll use drip as our thing. So put the drip into your chat if you want to be a participant for the drawing for that. Let me get the screen. Let me get rid of this. And let me go get the share screen. There we go. Boom. Let's make it a full screen. Let's get rid of that. Boom. Okay, we're ready. So we got 16 entries. Anybody else want to participate in the drawing? Okay, so it looks like we're capped out on the drawing. So it doesn't matter, by the way, if you put drip in there 4 times, the giveaway tool will not allow you. So Erica, it doesn't matter how many times you put drip in there. It doesn't matter. It's only going to collect one of them. Okay, here we go. So anybody else want last call? And this is for the debt securities class next Thursday, 3 p.m. Pacific time. Remember, you need to claim it within an hour. Send me an email. My email is Dean the Series 7 Guru, Dean the Series 7 Guru at gmail.com. I'll put it up before we go. All right, here we go. We're drawing. Boom. Now, our rule is you can't win more than once. Wow, Giselle. I don't know if I put my phone number up there, but so Giselle, let me give you my email, and you need to collect it. I said as within an hour, you need to submit an email to that address saying you're the winner, and I'll send you the link to that class. You're welcome to give that class to someone else if you'd like. Okay, so I think Erica talked me into as she usually does, has talked me into drawing for 2 tonight. So if that's assuming I know how to reset this thing. So I'm not so sure that's something I know how to do, but let's see if I can reset. Now, I think here on the reset, let's do a different word just to make sure that we're not actually doing, let's say, what's the new one? Let's say,
Spread.
What's that? Spread. I like that. Let's do spread. Start collecting. Oh, I got to choose a broadcast. Okay, so you should be able now to start putting spread in there. And it looks like I am on the screen there. Let me get full screen. So we got 8 entries for spread. Anybody else? 11 going once, going twice. So we got one winner. We got Giselle. So Giselle, I don't know if you entered, but if you did, you can't win twice is the only rule. So it's got to be somebody new that gets this one. Okay, let's do our second drawing.
And the winner is...
Oh, Erica, I just saw you go by. Oh, man. Erica, our other Erica.
Erica from San Diego.
The other San Diego Erica. So Erica, send me an email at deanlaseries7guru@gmail.com. And I will send you the link to that class. Again, you can't have 5 people share the link, but you can give the class to someone else if you can't make it on Thursday. All right. Well, remember, as I say, inch by inch, your exam is a cinch. Yard by yard, your exam is hard. And as Brian says,
stay with what you know. You take the test. Don't let the test take you.
All right, everybody. See you next Tuesday. And then I'll see the rest of you in the overtime session in a couple minutes. Bye-bye.